and welcome to PM Express. And what are we talking about? Financial sector regulations. Why am I laughing? Financial, I don't know whether it's French, English, or Twi, but financial sector regulations. On Monday, we woke up to the biggest news, probably even a shock, that two banks had collapsed, Capital Bank and UT Bank. But these were banks that, for the layman, they were doing quite well. They were out there, they were on the high street, they won awards, they were doing just fine. And then the Bank of Ghana says, that's it. These banks are no more have the license to operate. Therefore, GCB has taken over. Now, I ask myself, what does takeover mean? As in school, say, dash it to me. Has the bank been dashed to GCB? Did they buy it? How does it all work? If you're a shareholder in the bank, do you still get some profit? The owners of the bank, are they liable for anything? Because I was trying to educate myself, and there are hundreds and hundreds of rules, and with every step you must do this, you must do that. Well, all these rules abide by, and what happened? I don't know. In the English version, in a very simple term, I have two fine gentlemen who are going to educate us what at all it means for two banks to be taken over by GCB. Don't go away. My name is Anansa Kwao the Fourth, Chief of Akongo Dumasa, and I'm going to be educated today on what takeover means. Don't go. Well, thank you very much for staying, and there's a good old friend of mine whose Ambantemsa has expired and is due at another one. Sydney Casely Hayford, financial analyst, is in the house. Happy New Year, my brother.
Happy New Year to you. No.
I don't know whether it's deserting, running away, but you can't hide. You always have to be on PM Express. And then first time, there's a rule. I mean, all the first timers, I find Ambantemsa as a traditional house. So we have Dela Agbo, who's an investment analyst, CEO of Echo Capital Investment. Dela, you're welcome.
Thank you so much.
Good. But I'll start with Sydney. Sydney, and today the show is going to be in English. All in English. No.
What a refreshing change.
No financial English, because I really need to be educated. I mean, I listen to some other shows and they're very technical. They really understand what's happening. Me, I'm here to learn. When they say, Ghana Commercial Bank has taken over UT and Capital Bank, which were both private entities, which are not linked and have taken over. What does it mean? That's simple.
I know.
They bought it.
They bought it.
Thank you very much.
The reasons behind why they bought it is what we need to really explain. But they bought it. The Bank of Ghana is using a special technical term for the actual acquisition, the purchase by Ghana Commercial Bank. They are calling it a purchase and assumption transaction, which is a format in which they are able to allow a little bit more flexibility in the way the acquisition, the purchase takes a form. And in this case, they have been very, very clear in the way they have described it to the general public. First of all, both two banks were declared illiquid. In other words, they were declared bankrupt.
Okay.
They could not pay back monies that they have borrowed. I'm going to try and make it very, very simple, so everybody can understand, appreciate it. They've taken depositors' monies and they have advanced people monies. The idea is, together with a little bit of their own capital, they'll be able to pay people back for what they have borrowed from them. When you and I go and we deposit money in the bank, that money that we deposit is a lending to the bank.
Okay.
There's what we save, for which they pay us interest, and there's what we go and deposit as maybe a fixed term deposit or something, which they pay us back for. At some point, they need to pay us back after paying the interest on it.
Okay.
So you have a situation now where in both banks, they have taken on so much, what we call liabilities. They've taken on so much money, and the amount of money that they now have to use to be able to pay back those loans is not adequate. All right,
And
it's
they
not
don't have
adequate.
enough
It's not
assets
enough.
too. I've seen buildings, lands.
Well, you see, buildings and stuff like that, you need to sell them first before you get cash. There's a big difference between what we call liquid assets and what we call fixed assets. Liquids or convertible assets are easy. If a bank lends you money and he wants his money back, he comes in and says, pay me my money back, give me my cash. If you have the cash, you pay. If you don't have the cash, you sell something and pay. All right, that is easy. But as far as the bank is concerned, rarely will you find a bank owning assets like buildings and office premises and things like that, because they are not easy to convert into cash. So they keep that as a minimum. And what they do more is the loans that they give out, because they know they can actually ask for those loans to be repaid. Now, when you have a situation where the people you have lent the money to have not been able to pay you back or can't pay you back, have defaulted, as we say, they have not been able to pay back, those assets, those loans, we classify them as non-performing loans. All right? As some people will also say, toxic loans. When they go bad, they are now toxic. See? So you are not able to collect that money back, try as you may. You can take them to court, you can get the court to agree that they will sell assets and pay you back, but it's not easy. So when you think you have, say, maybe 100 million CDs worth of assets, and then most of those assets are impaired, toxic, they are non-performing, it can bring the value of those assets down to about 50 million from the 100 million. So where you thought you had enough money to be able to cover the borrowing that you have made, you find suddenly one day that because something has happened, you can't make it. So we will get into the specifics of it if you want to, and I can explain a little bit more about how the whole thing happened, and why we are where we are. Okay,
let me bring the line here, because you are an investment. Yeah. Now, I'm listening to Sydney. So I'm a bank. I mean, obviously, even though it was announced on Monday, they didn't go bankrupt or they didn't realize on Friday that, oops, we've hit the red line. You know, so some time ago, they must have realized. I mean, with all that time, couldn't they have liquefied some of their fixed assets to come and balance things? I'm just asking. No. You see, like if Sydney said, if you know, I owe the bank, and they came to me and I didn't gonna have a car, look, that was your collateral, so that's it, we're taking the car. Now with the bank, it's like a going concern. So I mean, once they are hitting the red, aren't they able to, you know, I don't know, find money from somewhere or sell some things they owe or borrow more to bail themselves out?
Yeah, it's not as easy as you thought, that it's just easy as just borrow money. You have to now get investors, other investors that will be willing to invest in your entity. In this case, these two banks have to go out there, look for other investors that will be willing, looking at their books. Is it enough? Looking at the liabilities and the assets. Is it worth for you to put additional money in it? Will you want to take over completely? Because there are different types of acquisition and takeovers, right? They can be friendly or hostile. So you have to think about it. Now,
this one was hostile.
I will say it's hostile.
The speed with which they change the signboards.
Well, it's a little different. You know? I mean,
somewhere in the middle.
I would say, because this is a forced. It's a forced shutdown by the central bank.
Yeah, so it's forced shutdown because it's not friendly, as the board of directors of these banks would actually go to a board meeting and agree that we want to merge with another bank. It was just taken over by the Bank of Ghana because of their exposure.
Could it be because, I mean, but the Bank of Ghana must have given them some time. I mean, they didn't spring a surprise. I mean, could Capital and UT merge, or it's just a non-starter?
It will be hard to say. Like, it's hard to say that two unhealthy institutions merging. It will be difficult to tell, because we have to know their liabilities and assets. If the two liabilities coming together if it's still more than the asset they have, they still will not be able to survive it.
You need to understand some history. May I?
Yes, yes, of course.
The banking sector, all right, has been problematic for a long time. It's not, you are right in what you're saying, it just didn't happen on Monday. It's been going on for quite some time. The Bank of Ghana, as the regulator, must do all it can to safeguard the financial assets of us customers. That's its prime job, to make sure the economy is sound by providing enough blankets so that there are not too many shocks and people don't suffer too much loss. As far back as 2015, there was an asset quality review. An asset quality review means that some technical experts came in and they looked at the banking sector as a whole and looked at a whole group of banks and looked at who owed them money, which are their assets, and then determined whether or not those assets were good and could be collected 100% or 50% or 10% of it could be collected. And in so doing, they gave a position as to exactly which banks were capable of surviving in the event that suddenly you would have to close the bank down. Would they be able to pay everybody back who they are taking their money from? This is simple banking 101 I'm trying to do here. Now, when they did do that, what happened was, out of the selected number of banks that they reviewed, I think there were about 28 or so of them, 8 or so, all right, were problematic. In other words, they determined that 8 could not survive. And out of those 8, these particular 2 were singled out and identified as imminently incapable of carrying forward the business of banking. That's what the Bank of Ghana's job is, to make sure that the banks can carry on the business of banking. Having determined that, you now go back and say, okay, so what is it exactly that caused these assets to become impaired the way they are? Okay? Now, I can tell you that if you look at the financials of this country, you will understand that there are just a handful of particular loans owed to certain institutions that have caused the collapse of these 2 banks and will cause the collapse of several others as we go forward. The money owed to VRA, or the money owed by VRA to the banking sector. And when I say the banking sector, I'm saying so because I'm not talking about one bank, I'm talking about several banks. There's money owed by VRA, a lot of it. There's money owed by Tema Oil Refinery, a lot of it. There's money owed by the bulk distribution companies, the bulk oil distribution companies, the BDCs. There's a lot of that. There's money owed by ECG, all right? And then there is money that is generally owed to customers. And in this instance, one particular customer practically failed to pay back after borrowing so much money. A company called Finatrade, all right, which everybody talks about, but the bankers don't want to tell you exactly how exposed they are to Finatrade. And Finatrade was somehow linked to Cocoa Board and cocoa trading and the cocoa purchasing. So we won't go into that because that's under investigation at the moment and can bring up a whole can of worms. Now, these particular institutions are owed money. Now, I'm forming a chain, okay? They owe the bank. Government owes these companies money. Or government has pledged to cover the debts of these companies. And government was not able to pay back. So that this asset quality review that I mentioned was done as far back as 2015. All right? And so having established exactly where all these banking institutions stood, the best thing to have done then was to have closed down these banks that were incapable of surviving. But the government then did not do it and allowed it to carry on. And there could have been political reasons why it decided to do it. It could have been financial reasons why. There could have been several reasons why, but they did not do it. So at this point, you are now faced with a situation that if you carry on and allow these particular banks to keep on doing business as they are doing it, when you have determined that they are not liquid, they are illiquid, all right, and not capable of paying back the money that they are taking from depositors, now you are doing a big disservice to the customers of the bank. So the only thing you can do now is to find a mechanism by which customers' deposits will still be honored and still be paid back to them, but those banks cannot continue doing business because they have virtually broken the rules of the game.
Dela, now listening to what Sydney is saying, right? The two types of monies that the bank is giving out. One is basically sort of a sovereign guarantee lending because you've lent to government. And since government hasn't collapsed, one day you get the money back.
Yes.
The other one is what you and I have borrowed. And you know in Ghana, you're going to borrow money, you have to bring your grandmother, the donkey, the next door neighbor, everybody, is there, and the, lending officer literally comes, points your house and takes a photo. So, aren't those collaterals that can, what do you mean toxic loan? Can they sell those houses and all those collateral to get the money back? As for government, it's government, so eventually you get the money back.
It's not as easy as just selling those collaterals and just getting those monies back. I'm sure if you go through UT's books, I'm sure they have a lot of assets. It's not as easy as that. The fact is that there are some basic things that, and I think this is more a wake-up call to all of us. It is about time that we should look at our policies and certain things that we need to do right. As a nation, it's still funny that we still have to go. For example, if you want to open an account in Ghana, they still have to give you a piece of paper and you have to do directional sign to your house. You want to take a loan. By now, we should have a solid credit bureau, whereby some institutions that goes to Bank A, borrow, go to Bank B, borrow, without them talking to each other. It causes problem. If you have a credit bureau that is solid, everybody that lends to anybody, in the developed countries, US and others, just your social security number does everything for you. But in Ghana, I can go to Bank A and borrow 100,000, and I'm gone, and I'll go to another bank and borrow. When you are done, then you come to the investment companies like us, and also tell us that we have a very good business. You have this, you support it, and without knowing that you are already exposed elsewhere, we also give you facilities to go out there and run a business. So those are the things that the government has to start thinking about. How can we put systems in place?
But so let's say if I went to Bank A and that's my collateral, my glass of water. If I go to Bank B, can I still use the same glass of water as a collateral?
Now they introduce a register, forgot the
Depository.
Yes, where we can actually register these assets. When it's registered, it will be difficult for the individual to use the same assets.
So why aren't the banks selling these collaterals to make their money back?
Selling is not as easy as that. You may have a piece of property. For example, you have a house. You're going to sell it. The client in question owe you 100,000. The interest is piling on daily. At a point, that asset may be under the water. You may sell that, but you still will not get the same amount that you've lent out. So, for example, if you gave me a house and the house is worth 250,000, I've given you a loan for 200,000. The anticipation is that you're supposed to pay me in 91 days or 182 days. Now it takes you about 6 months. You're not paying. You come in giving reason. At the time that the bank makes the decision to sell, that asset may not be able to cover the exposure that you have.
In such a case, don't you wipe off your interest and just get your capital back? At least you're still afloat.
Yeah.
Now the bank is going to be shut down. You gave me 200,000. Maybe I was supposed to pay you 210. Now interest is piled up to 380. Just get your 200,000 back and at least.
But don't forget, you may still owe. For example, if it's a fixed deposit client, that you still owe them the interest, then how are you going to cover that interest?
It doesn't get easy, does it?
No, you see, the question you're raising.
I'm just trying to find out how it is that a bank will collapse.
And the question you're raising is how the banks make money. All right? The bank is not prepared to let you walk away without paying the interest that you have agreed you will pay. So they will keep calculating the interest. The logic being, if you pay me that 200,000 that you're referring to. I can go and lend that money to another person, and that person will pay me my 10% that I'm looking for. For as long as you're holding on to it, you are depriving me, the bank, of the opportunity to actually go out there and lend that money to a third party, somebody else. So you are depriving me of my interest that I'm supposed to earn. So they will not wipe off the interest if they can avoid it. They will try as much as possible to collect 100% of the interest. Only where it looks like as if it's totally impossible and it will be a bigger loss if they let you walk away with the capital sum, then they will negotiate and agree to write off some of the interest. But they won't do it. But you see, what Della was saying is where we need to really think about what's going on in this country. Number one, we don't have a house numbering and street naming system that works. The banks should be able to simply locate you either with a GPS factor, or else they should be able to identify who you are. If you have you're in a region and there is a district and there's a zip code and there's a number and there's a street name, should be able to identify you and find out exactly where your house is situated if you use that as collateral. We haven't perfected that system. If you have a national identification system so that I can tell who you are, where you are at any one point in time, and I can link you to your property, to your home, wherever you are, that helps in identifying you as you go forward, which is why there's a big push to get a national ID system in place. Third, we have a lands commission, all right, where the process of actually registering the title to your land or even searching for a title sometimes can take up to 6 months. And people therefore go and pledge the collateral, their property as collateral, and they will give you the address, location, and title documents and everything. The banker who is lending the money, the primary person lending the money, cannot identify exactly whether the title is actually true or false. But the person who is borrowing the money, I can then go back to another bank, go and use that same title document, pledge that as security, and borrow the same or even more money. By the time Bank A figures out that the title documents, are not true, he's already walked away with $2 of money. All right, and now the question becomes legal. Who has the primary right to collect the debt if we get to that point? So we have a problem with the commission, the lands commission, and title documents and land matters generally, and that's another problem. Then you also have the general economic situation. If a bank lends you money and you've pledged a property worth 250,000 cedis, then the bank wants to collect the money and you can't pay and says, okay, I'm repossessing your house, I'm going to sell it in order to get my money back. Bank goes to the market only to find that nobody is prepared to pay 250,000 cedis. One, because either the value of it was overblown in the first place, or secondly, they don't have the money. And it's more likely these days that people don't have the money to be able to buy properties and land and other assets at that particular rate, so they will offer something less. Then the bank is in trouble because it can only collect half the price of what it lent out. It has to find the other half from somewhere.
Let me take a quick break here and find out that is there a line where where financial or the board sit down and realize that, listen, at this point we are not able to lend more, or is it always the gamble to say, look, let's push it a little further and see if we can make money? We are looking at the financial sector regulation. We're looking at the takeover of UTA Capital Bank, and we're doing all that in English. And so far, it's good. I've gotten a couple of messages saying, yep, Nana, I'm following the show now. Is everybody, oh yeah, you're on the big, and you're shy to go and say, look, I don't understand what's going on. So here we are not shy. We're getting the English version of it. We're going to find out, the Bank of Ghana and all these financial regulations, do they go in on a daily basis and check how these things so you can stop it? But I think it falls into my question too, that look, let's say you set up a bank with 200,000 cedis, that's how much money you have. So probably you can loan up to maybe 180 or so, and then start working with it. Is that how it works in a bank? You know, you have a certain money and you loan up to a certain point?
Okay, yeah, it depends. Definitely, for banks, for instance, that's why they have a reserve. So they are required to have X amount reserved with Bank of Ghana. Now, they have access to the rest to loan, and also looking at the risk profile. At the time, about a year plus, when the interest rate was very high, most of the banks were not actually lending. They preferred to just to buy treasury bill. And then they should be able to get their returns on from the treasury bill. However, it looks like because the treasury bill rate has gone down now, most of the banks are beginning to lend. And you can make decision whether how much do you want to lend and how much do you want to actually invest. So most of the banks, they look at that.
So I mean, is there a line where, I mean, because the main reason we're saying is that these guys have borrowed too much money, they are unable to work anymore. I mean, at which point? I mean, if 10 CDs were their line, how much over 10 CDs have they lent out to collapse the bank?
There's a whole division in the central bank that does this job. It's the banking supervision division of the central bank.
Yeah, the regulation.
The regulator has the banking supervision. Banking supervision's job is to monitor the financials of the banks periodically. And they do that sometimes every quarter, every half year, sometimes even more frequent than that. If they don't think the bank is performing well, they have suspicions, they'll do it more thing. There are ratios that they use to determine whether or not a bank has adequate capital to be able to pay back what it has borrowed. One of them that you're referring to, the direct one you're referring to, is what we call the capital adequacy ratio. In other words, the ratio between your assets and your capital, your liabilities and your capital, has to be above 10%. All right? There are numbers. So if you constantly fall below that level, the banks raise the central bank will raise a red flag. Banking supervision will get a little worried. There are also certain amount of cash reserves that you're supposed to lodge with the central bank, and you must do that. That is based on what we in the jargon like to call your balance sheet. Your balance sheet is simply how much do I owe and how much do people owe me. It's my balance sheet of assets and the liabilities. And that also is a determined ratio which they do. So without getting too complex, there are several determining ratios that the central bank uses in order to be able to monitor the retail banks. So when you go beyond or when you lose track of where you are, banking supervision will alert you and say, my friend, your ratios are out of whack. You got 45 days, you got 30 days, fix it. By the next time we come back for our next review, that thing should be corrected, or else you have a problem. In this particular, to bring it home to this particular instance that we have, for these specific two banks, Capital Bank and UT Bank, they were giving adequate notice to correct the imbalance in what was perceived to be their inability to meet their obligations. And the Bank of Ghana has tried severally. Don't also forget that the central bank is your banker of last resort, as we say within the industry. That when a bank is incapable of meeting its obligations, it can go to the central bank and borrow money for a short-term period. Use that, turn it around quickly, make some money, and then pay it back. Now, that also is problematic because every so often we have the monetary policy rate, as we call it, the MPR. And the MPR is announced by the central bank and says, okay, for now, our monetary policy rate is at 22%, 23%, whatever. I don't know how much it is now.
It's 20, it's dropped to 21.
It's dropped to 21, so it's down. But that is the rate at which a bank can borrow from the central bank. So if you can imagine that, when you, the retail bank, are in distress, you are borrowing from the central bank at 21%. All right? Now, that money that you take, you have to on-lend it. So if you take that money from the central bank... Is that where the
greed comes in, 36, 32,
yes,
30?
Yes, absolutely. Because if you go and borrow money from somebody at 21% and you want to pay that money that person back plus their interest, you've got to charge more than 21%.
I know, but
to be able to pay back.
Why?
No, but no, I think by not only thinking about, for you think about it as if it's a grid, but it's not, because you may want to factor in the other factors, the risk profiling. If I borrow money from you 21%.
I'm glad you raised the risk. You see, everybody's talking about risk, and we can't seem to find the equilibrium. So I borrow at 21. Oh, he might not pay, so let me give it to him at 38. And definitely he can pay. I'm sure maybe at 25, even if he didn't want to pay, maybe he can bring it back.
Yeah, but that is the reason why, because once you look at the risk profile and you realize the person cannot pay, you want to charge the highest rates in case the person makes 2 or 3 payments before the person defaults. You've gotten some. For instance, look at the US, because they have very good credit profile. They borrow money at a very low rate. But Ghana, for instance, because our rating, I believe it is B, what?
Yeah, B plus.
B plus. We borrow 10, 11, 15%. So depending on your risk profile, that determines the rate you'll be given. The same thing applies. We still live in a country where we're just talking about the streets, address, IDs, and the default rate in Ghana is very high.
Big companies, still borrow at these ridiculous rates, and sometimes they have massive assets. They probably need maybe 1 million Ghana cedis. They have assets maybe 20 million, and they will still have to pay 28, 30%. I mean, but that company like this could have easily done 20, 25, or we borrow at 21 and give it to them at maybe 23 and a half. Because look, if you don't pay and sell one of your flats and clear it, but they don't. There's greed.
Look, in Ghana, you see, another thing that I notice is that our law also kind of have some issues there, where a lot of big companies you talk about, they know they have lawyers, they know that if I default, you go to court, you go through, or some people say, okay, it may take time for me to pay you the money. And time value of money. If you don't give me the money, the interest is piling up. I need to pay the investors. I need to raise these monies they pay. So these things affect the financial institutions and the other investors that gives us money as well. So it's not like the grid, but we are just trying to get as much as we can from the places that we invest these monies.
There's a bit of greed.
There is a large measure of greed because there is actually in the business. He's trying to cover up for his people. There's a large measure of greed. If you read a little bit of literature, you remember the Shakespearean story. What's the name of that play? Shylock.
Okay.
Where Shylock said he wanted his pound of flesh. So you can have your pound of flesh, but don't take the man's blood.
There's a drop of blood.
Okay. And that has always been the guiding example of it. You can take what you can, but the usury laws will cap you from charging a certain amount of interest over and above a certain factor. So it's important to the Bank of Ghana to make sure that people don't go beyond a certain limit. But you'll always find that there are schemes in place where people are preying on the desperates who need to borrow money. So you can get very desperate and you go somewhere and say, yeah, I'll charge you 10% a month, which on a simple rate basis works out to be 12 times 10% a month. That's 120%, which is way beyond what it should be. But when you are desperate, you will do anything to be able to relieve yourself of that short-term situation. But the thing is, this is also all tied into inflation. It's tied into consumer price indexing. It's tied into preserving the value of your money, and all of that. So it's a problem. If you're going to make sure that you can use the same CD today to buy the same quantity of goods tomorrow, then you want to make sure that you can get your money to preserve, which is why we also keep dabbling in foreign currency, because the dollar is more stable, it's less likely to deteriorate. So we convert our CDs into dollars in order to preserve the capital value of what we have. So it's not a simple thing. It's a whole myriad of problems that interlink with each other, both within the political economy the general financial economy and the monetary economy.
Should we have saved these banks? I mean, the Ghanaian banks. Should we have saved?
No. No. You see, the minute you start doing that, and then you start prescribing one rule for one group of people and another rule for another group of people, you start distorting the economy.
We have to look after ourselves. This is Ghana. We look after ourselves. What does that say?
No, I think this is, whatever that is happening now is good for the economy. However, I want to mention that the source of funds is very important in what we do. For banks, investment companies, for example, Bank of Ghana, the NPR rate is the last resort. Usually, most of the banks in Ghana go for fixed deposit. That's the main source for funding for most of these guys. Now, Ghanaians, as we are, most of us are very greedy in terms of the rate. If you have 100,000 you are going to place with a bank, you are negotiating these high rates. Even as investment companies that do fixed deposit with these banks, because I've collected money from you, you give me a rate, I have to place it elsewhere with a very high rate. They have gotten this rate from us, 30, 31%. They also have to add some premium to it before they give it out. So these are some of the issues we have in the industry. But preferably what I would want to say is that in Ghana the regulators have to probably think about the issue of banks advertising fixed deposits themselves. You see, fixed deposit is one of the investment products out there that investment banks and other institutions invest. Now, an individual walking the street may not understand the risk profile. For example, a few weeks ago, assuming these two banks, assuming they're still advertising their fixed deposit rates, that they have a very good rate, I'm sure a lot of people would have still been giving them money without knowing that they have these issues. So that's why I think it's about time we should be looking at the source of funding for these banks, and would they allow investment banks that can analyze these risk profiles before they give them, or we do placement that we currently do with them. And that will help in terms of the structuring, in terms of placements, money given to banks.
On that note, let me stay with you. I mean, like on the stock exchange came up and also said, look, that's it. You know, they're not true more trading because I think the banks will not bring in their books to the stock exchange. I mean, after first book not being signed, second book not being signed, at which point should the stock exchange say, no, hold on, something is not right here, and therefore we can't continue trading?
The stock exchange is being regulated by Securities and Exchange Commission, right? And the Bank of Ghana, SEC, they work hand in hand. I'm sure the stock exchange will definitely prompt SEC, because UT, for instance, is listed on the Ghana Stock Exchange. So definitely SEC has to get involved in terms of what is going on, and then can instruct stock exchange to delist it. And I believe it was delisted for a few months before it was UT, for instance, was brought back. But they've not been given their financial for quite some time, which also affects investment analysts, because you will not be able to analyze this bank well enough to advise your investors as to whether they should invest in this share or not.
You see, we have a bit of institutional failure on this particular matter. You're right. The stock exchange should have taken some action much earlier than this, because as far as I know, UT had not filed its financial statements since 2015.
Yeah.
All right. So it didn't file 2015, didn't file 2016. We're not due for 2017 yet, but for 2 years he has not filed it. And it is supposed to file its returns with the stock exchange and with all the regulatory bodies. You can't leave it for more than 30 days after the financial year end, which is December 31st. So by March 31st, you should have filed your financial statements with all the regulatory authorities. If you didn't do that, the stock exchange should have put pressure on UT Bank to come forward and to give a reason why. And if it didn't get a satisfactory reason, then it could have delisted UT Bank ages ago. But in order not to create panic in the financial sector, they probably would have spoken to the Bank of Ghana. The Bank of Ghana would say, yes, we are aware, we are taking action, We have given them time to correct the imperfection, and we're hoping that we will see an end to this thing very soon. However, they've now been delisted because of where we are with the situation today. So, as far as the Ghana Stock Exchange is concerned, there's supposed to be some cover, insurance of some sort cover for the investors who purchased all of those shares. However, because the bank is so illiquid, completely bankrupt, it is possible that shareholders might not see a pesewa at the end of all of this. You have to make a distinction between shareholders and customers, two different things altogether. Customers who come and leave money in the bank, deposit their money, they will get all their money 100% intact. That will not go anywhere. That is why GCB was given the offer, which they accepted and purchased all of that. But for those who actually invested into the market, there's a big question mark as to how much they can get, because as part of the transaction, the Bank of Ghana has appointed what we call a receiver, all right? A receiver. That receiver has been given, if you want to, a whole list of all the assets that have not been taken over by Ghana Commercial Bank. Ghana Commercial Bank did not take over all the bad loans of the bank. They took over what they thought would be good loans and which they thought they could collect. And the bad ones have been packaged and they have been given to a receiver, which is Waterhouse, who will then try and collect as much as they can out of all of that stock of bad debt and get a commission fee for what they do. So when they finish collecting all that money, the shareholders will then know whether or not they do get some of their monies back or not. All right. So there's a bit of a good cushion in all of this. The problem that we have now, Nana, is how far is the Bank of Ghana now willing to go in order to clean out the system? You see, we've been here before. We've been here before. Sometime in the 80s, we set up what we call the Non-Performing Asset Recovery Trust, NPART. This was a World Bank intervention. At that time, the situation was worse than this. The banking sector was virtually collapsing. The toxic loans, the bad loans were so much that you couldn't even go and borrow money at the bank securely. The decision was taken that all the banks should surrender their bad loans to this institution called NPART. And those loans will be collected separately and independently from the banks. The banks will then have a clean set of books and they will go forward and now try and recapitalize and try and do better banking and not get where we are again. But unfortunately, we are there. In this case, though, in a rather peculiar way, I try to identify specific institutions whose debt to the banking sector is so huge that it has caused this major ripple that we are seeing now. Together, there are about 5 or 6 of these institutions I've identified. TOR, VRA, ECG, the BDCs, and a few have been packaged in what we call the ESLA, the Energy Sector Levies Act, all right, acronymed ESLA. These particular institutions, as identified, together owe the banking sector, all right, about 11 billion cedis. If you add up all their debts separately, you come up and you add them together, you get about 11 billion cedis. This 11 billion cedis is being absorbed by the banking sector. And that's a huge, huge burden for them to pick up. So the banks who lent those monies to these institutions are now suddenly finding that they can't collect. And they can't collect because these institutions are owed by government. And because government owes them, they can't pay. You have this problem. Then apart from that, there are all those contractors that government allowed them to go and borrow money from the banks with the guarantee that they will pay them as and when the money comes in. They also are a burden on the banks. Because now government can't pay them and can't pay on time, so it's accumulating and it's causing more and more problems. So this particular thing has been identified, and we've passed the ESLA Act, the Energy Services Act, which the bank is, the government is going to issue a bond and use the proceeds of that bond to pay off those energy loans. When they do that, the banks will get a little bit more liquidity and will be able to on-lend. But in the meantime, government is putting a lot of pressure on the Bank of Ghana to try and drop the interest rates down, to make it more affordable for you and I to go and borrow money to buy our cars. And we're not getting that opportunity.
I know there's going to be an investigation in the banks. Did something go wrong, or this is just one of those things? I mean, did something go wrong?
It's bad management. It's poor government policy, poor management, and government not being strong and bold enough to do what they know is right to do. All these stuff we are talking about were identified during the previous government's time. All of this was identified. They've done the reports, they did investigations, they came out with the asset review. The Bank of Ghana then did its supervision investigations. It did all that and came up with the resolution and what needed to be done, the recommendations of what needed to be done. And part of those recommendations, I can tell you on authority, is that these two banks should have been shut down. And that wasn't this government. This government has not had time to do all of this. It was done prior to this, and they reviewed it to make sure that it's the right thing to do. But the previous government should have cleaned it out once and for all. But I think out of political expediency, they didn't. So we're now facing the brunt of it. But even if this government didn't do it, somebody has to come and do it, because you can't carry on this kind of level of debt.
I think we all contributed to this. There are a lot of people also that may have borrowed money from these banks, and they know they're supposed to pay, and they didn't pay. Contractors, government is supposed to pay them, and they're supposed to pay these banks. The government will delay, and we have a lot of this going on, and it's about time we all have to look at it that people with excess, they are the ones that place their money for people who don't have it to go and take it. When you take it, your job is to do what? Pay back. Rather than these institutions chasing you to pay this money back. And this is what it is, and we all have to learn from it.
You know, I advise a lot of small, medium enterprises on what to do. And the one thing that I'll tell anybody who comes to me to help them to go and borrow money, I say, I'm not going to help you borrow money. I don't see the reason why you should be borrowing money at 36, 45%. You can't pay. The only thing it does is to place a burden on the consumer at the end of the day.
Just to end on a sentimental note, I mean, if you're being, is it a big blow, or as a businessman, look, it's just a financial institution going down?
I cannot even start answering that question. I don't. Everybody in a situation like this, it's a very, very singular personal thought, because he started this business from scratch. From
Cantonment.
Yes, and he's built it up into a recognizable bank. He's been giving so many accolades in the past: best bank, fastest growing bank, best corporate executive, best CEO, etc., etc., etc. And he has risen to a pinnacle. If it's all come tumbling down now, I'm sure that there will be a lot of sadness in him to see that, this is how he's more or less, if you like, blazing out on a very bad note.
There's UT in Nigeria, there's UT in South Africa. I mean, are they linked, or those ones are safe?
I don't know how they are set up, but if it's a common shareholding, the individual, the UTs in the individual countries are probably registered. If they are registered as separate companies in that country, then this doesn't affect them, because this is a specific country location thing. Okay. If, on the other hand, it's a group situation, and the group holds the majority shareholding in those countries, then it might have its own implications.
I believe the UT holding holds most of these assets. However, I think it's just affecting
the bank.
This particular bank.
Well, I hope you got a gist of what's happening. And, well, to all you financial guys out there, abide by the rules, and to government, pay your bills, and let these banks stand by. Like, I think the last one was quite touching. After building an empire, to watch it crumble, must be very, very tough. Tomorrow is Hard Truth, and then on Thursday we are back to do this all over again. Thank you very much for watching. Thank you, Della, and thank you, Sydney. It's been educative.